Let's start with the day's market action. Sensex and Nifty hit the highest level in 10 months as earnings season draws to a close. Bank stocks led the rally, with the Nifty Bank Index ending at a record closing high. In the currency market, the rupee traded in a narrow band against the dollar. Indian currency continues to hold its ground against the greenback amid easing crude prices and upbeat domestic stock markets. As things stand, $1 continues to cost more than 82 rupees. Chief Economic Advisor Anantha Nageswaran said India needs to use forex reserves judiciously to ensure it has some firepower left for 2023 as well.
We should, in the short run, allow the rupee to depreciate gradually, and we should use foreign exchange reserves judiciously, keeping the firepower for 2023 as well.
India's Chief Economic Advisor Anantha Nageswaran was speaking at the annual session with the Indian Chamber of Commerce. Citing latest data, he said the production-linked incentive scheme is yet to pick up steam across all sectors. CEA said only pharma, mobile phones have done well so far.
The PLI schemes were announced in 2020 and 21, but there is going to be more expansion and more likely to grow momentum. Right now, it is happening in 2 or 3 areas: mobile phones, pharmaceuticals, as well as chemicals, but it has to pick up steam in other areas as well, and hopefully in the next 2 years it will happen.
The CEA was citing data from the DPIIT as of September this year. The data shows pharmaceutical drug manufacturing has achieved 107% of the investment target that the government had envisaged. However, only 13% of the employment target has been realized. So far, the other relative outperformers are also linked to pharma, with active pharma ingredients and medical devices faring better than some of the other sectors on both parameters. Mobile phone manufacturing has realized 38% of the investment target, but only 5% of the employment target. Food products sector, meanwhile, has achieved 54% of the investment target and 49% of the employment target. It must be noted that Pharma PLI schemes were among the first off the blocks as it was launched in 2020. In sharp contrast, Electronics PLI, which was launched in April 2020, has achieved less than 5% of the stated investment target and less than 0.5% of its employment target of the PLI schemes launched in 2021. Speciality steel, automobiles, drones and their components have not seen any investment so far. White goods PLI scheme has seen 13% of its investment goal being met and 16% of its employment target. However, 2 schemes launched in 2022 have seen some traction. Solar panels have seen 27% investment and 8.5% of the employment target achieved so far. Textile PLI has also seen about 7% of its investment goal being met, though no employment under the scheme has been generated so far. And as the earnings draw to a close, PSU banks have stood